One of the biggest fears most of us have regarding retirement is running out of money. And the current market volatility is definitely adding to those concerns. Cesar Chacon is the owner of the Insurance Hub. He is here to explain how annuities can provide some peace of mind. Great to see you.
Good morning. Thank you for having me.
So annuities are complicated, and I think that scares a lot of us off just because it seems like a lot to process.
Yeah.
So help us understand how an annuity works.
Yes, so basically it's a very complicated situation, and it doesn't work, it's not just a package deal for one person. It depends on what you want it to do.
Okay.
For example, there's a lot of retirees that end up with a retirement of some sorts of 401k and IRA, and they're like looking at that retirement, that nest egg, and they say, how do I make that last forever and ever, right? So annuities are a good vehicle for safe investments, right? To not be able to lose your principal. Whereas if you have it in a 401k or IRA and the market crashes, well then the principal of your nest egg goes down.
Right.
With annuities, you have the safety of principal, and you have the safety of growth, and you have guaranteed incomes. You could have guaranteed incomes. So those are the ways that you can kind of look to work on your retirement outcomes and goals, and kind of look at which direction you want to go.
Okay, so let's just use $50,000 for an example. If I put $50,000 into an annuity, what are some of the ways that then that pays me through retirement?
So basically, annuities have a time that you're looking at. There could be a 5-year term where you have to leave it in there so it can work. Could be a 7-year, could be a 10-year. I've seen other terms could be 20 and so forth. And so what happens with annuities is that they end up building over a period of time. So again, if the market crashes, your annuity is going to be safe.
I feel like we all just have this retirement money, but now we have to figure out what to do with it. Why do annuities give us some more options?
Well, let me explain a little bit more about that nest egg option, because a lot of retirees come out of retirement, they have a 401k, like I had mentioned, an IRA or something, some sort of retirement, and they look to see how long they can possibly live the rest of their life with this nest egg. What happens, what they tend to do is they tend to spend less than what they could spend. Whereas if they had a guaranteed income, then they know what they can spend. And the annuity gives you that peace of mind, or a financial advisor will give you that peace of mind to be able to say, okay, well then this is guaranteed income for the rest of my life. So even though annuities may not grow as much as the market, but it's not going to crash when the market grows, but it gives you the guaranteed income that folks are looking at.
Which makes sense, because if I only have this much money for retirement, and especially with the market doing like it's been doing, how do you not worry that you're going to run out of money, and then maybe your quality of life is compromised?
Yeah, I can tell you that we encounter a lot of folks that have this nest egg, and they're like, no, I can't do that. I want to go on this vacation. I want to do all these things, and I look at that, it's like, you have enough money. You just need to sit down and take a look at that and just take that plunge. The problem too with annuities is, back in the day, a lot of folks invested in variable annuities, and when the market crashed in 2008, 2009, annuities became a bad word. But fixed index annuities or fixed index, or those are very safe investments, and so those are just going to continually grow. And when you annuitize them, meaning that when you start taking the guaranteed money income out, those are just going to be guaranteed for the rest of your life. And so I think folks generally get worried about it, because if I could say that they start planning for the last third of their life, as morbid as that sounds. Right. How am I going to live the rest of my life with this much nest egg? And planning goes a long way.
Well, and annuities are certainly part of a diversified portfolio, right? So that way you're protected from at least some of the market ups and downs.
Yes. Yeah, I tend to have a hard time with some of the financial planners that are out there, because financial advisors do offer you some good solutions. But when you're over 60 years of age, I mean, you really should start planning on doing something that's more safe, like an annuity, than having your monies out in the market. Because again, if the market crashes, then you're looking at a reduction in your principal by 20 to 30%, kind of like in 2008, 2009. A lot of folks didn't recover from that. A lot of folks still talk about that. And so, I know financial advisors, a lot of them are good, but a lot of them like the assets under management, meaning that they like the ability to grow that through the money markets and so forth. The market crashes, then guess what? One more thing. There's a lot of folks out there that talk about that the market has not crashed. The big market crash has not happened. And so when you depend on the market and you think you're like going to be okay, it goes up and down, up and down. But when you have a big market correction or a big market crash, that's something that you should worry about.
Absolutely.
And with annuities, you're looking at a very safe investment.
Well, it's nice to know that it's not such the bad word it used to be and that the products have improved. For more information, especially about annuities, there's a lot of information that Caesar can give to you. You can go to theinsurancehub.net. We'll be right back.